presentation contains current opinions of Moez Ansari, Chief Investment Officer of Compac Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone and welcome to the Compac YouTube update for August the 18th, 2025. I'm Mo Ansari, President of Compac Asset Management, and thank you for joining me today. First of all, I want to remind all of you, click on the subscribe button so whenever I do an update, you'll be notified and you can watch it at your convenience. Or you can go to compac.com, click on Insights, and the podcast is there too. We talked about the market today. We talked about the divergences today quite a bit on the podcast. And some of the sectors we think are a good value. We talked about that. All of that podcast is there. Also, if you need help with your portfolio, all you have to do is send us an email at invest@compac.com or just give us a call the old-fashioned way. Pick up the phone, 800-388-9700. Give us a call. We'll be more than happy to help. Review your portfolio, give you some ideas where you're headed, what you're trying to accomplish, and that initial consultation is absolutely free, no cost. Looking at the market, good week last week. S&P was up 0.99%, Dow up 1.79%, NASDAQ up 0.13%. But this is the configuration I don't like. I like to see the NASDAQ leading. It was lagging. I like to see the S&P in second place, which it was. But then the Dow, I don't like to see the Dow leading. But it is leading right now, and this might be a sign that we are diversifying a little bit. We are broadening the market out, and that is a good sign. Emerging markets also did well, and the Russell had a really good week, up 3.2% for the week. Healthcare, which has been one of the sectors that has done not a lot, it was up 4.6%. It's just about flat for the year. S&P is up 10.5% for the year. So I think it's time to take a look at some of the healthcare sector. We talked about that in detail on the podcast, how some of the AI could help some of the healthcare industry, bring in new efficiencies, bring in new drugs, new discoveries. All of that is there. So I think it might be an area to take a good hard look at it. Oil, nothing is happening there. A lot of talk going on. Putin was in Alaska on Friday. Then we have all the European leaders today there in Washington. Is there going to be ceasefire? Is there going to be end of the war? That could be, a little bit bearish, could bring some of the Russian oil back onto the world market. But so far, I don't know how easy or difficult it is to get a ceasefire and the end of the war there. Interest rates also just about flat. They started out 4.27 last week. They ended at 4.33, 6 basis points higher. Not much change there. Even though we got a CPI, which was just about as expected, but the PPI, the producer price index or inflation at the producer level, was quite a bit higher. It was hotter than expected. But interest rates said, we'll have to wait and see. That's what we're looking at right now. So not a lot going on. CPI, as I mentioned, up 0.2, core up 0.3, retail sales up about 0.5%. As expected, consumer sentiment decreased a little bit. Again, we're in the dog days of summer. We are looking for some catalyst. This week we do have the Jackson Hole meeting where all the central bankers from around the world, they come in, they sit around, they talk about what's going on with the global economy, what's going on with their economies. Then on Friday we'll get a speech from Jerome Powell, which he lays out the economic picture and might give us some hints of what to expect in interest rates going forward for the rest of the year. Expectation is 25 basis point cut in September. That's just about baked into the market. What else are we going to get? Are we going to get another interest rate cut? Are we going to get another 2 interest rate cuts? I think that'll depend a lot on the unemployment number. We got that unemployment number last week, which was not good. And now 2 weeks ago for July. Now we'll get the August numbers, September the 5th. We'll have to wait and see how those numbers come out. Again, if we see a number which is not good and unemployment seems to be going up, then there'll be a lot of pressure on the Fed to really cut rates aggressively, not 25, but maybe go 50 basis points. We'll have to wait and see. This week, we don't have a lot of economic data, housing starts and existing home sales. That's about all the news we have. S&P right in that target zone, the projection we had from the February high, we projected it up. to 63.50 to 64.50 is what I was looking for, and we are there now. Today we closed at 64.49 and a half. We did go above it slightly on Friday. Yes, today we were up above it at 64.55. Support now is going to be this 20-day moving average and the 50-day moving average. So 63.71 and 62.38 are the two numbers I'm looking at the downside. One of the charts that I will talk about is divergences. When a market goes to a new high, the technical indicators should follow. When they do not, that's usually a divergence and something to watch. S&P weekly still right in that range, but if we can break above 64.50, I think that could project even higher prices. Now next week I'll show you the next level of resistance that we see. NASDAQ has gotten above this area that we talked about, 21.5 to 21,000. We're 21.6 today. That's where we closed, and we are above this level. So we could see an acceleration a little bit more to the upside in the NASDAQ. Weekly charts again, we got above this 21.5. Today we're, as I mentioned, 21.6 is where we are, 21,600. But still, this is the numbers that I'm looking at. Interest rates still stuck in that range, about 4.5% to about 4%, not going anywhere, just going back and forth and back and forth and back and forth, which is good as long as they're stable interest rates. That is, if they fall down a lot, that means recession is coming. If they go up a lot, interest rates, that means inflation is coming. So I think stuck here is not bad overall. Gold market, as I said, looked like a fifth wave top when we got to a new high, then fell back. Now we've broken below 33.91. Today we're at 33.76. Next support 33.20. And then if we break below 33.72 is support. If we break below that, then I think somewhere around here, 32.50 is the next area of support that I'm looking at. Oil going nowhere until if we get some kind of ceasefire deal, that could be bearish for oil. We'll have to wait and see. Bitcoin, which went up last week, a lot of excitement, came right back down again below the 50-day moving averages, or 20-day moving averages where we closed today. And now 64.13 is the next number I'm looking at. High yield bonds going nowhere. And this is the indicator that I talked about. Market has gone to new highs. We made a new high right here. But if you look at the relative strength index, this is the RSI. It went to a high right here, made a high, which is right about here, right here. Now the market has made a new high, but the RSI is lower. That is what is called a divergence, where the market goes to a new high, but the technical indicators do not follow. That means the internals, the momentum of the market is waning. And that's what we've said for the last month, 5 weeks or so. Market has gone nowhere. And that's why we talked about that, and Javed and I on the podcast. And we said, look out. It might be a little bit of time to do some pruning and planting. Just be careful. If you have some nice gains, how do you take them and go from there? Again, if you'd like to get the updates, just click on the subscribe channel. So whenever I post an update, you'll get an update. If you'd like help with your portfolio, all you have to do is go to invest@compact.com or just give us a call, 800-388-9700, and we will be more than happy to help. Those are my views. Those are my thoughts for August the 18th. I will be back with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compact Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compact Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that overfocus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.